Many types of divergence occurs in the system, and most of the time we just think of one indicator being divergent with another indicator, like power white and power yellow. But oftentimes we forget about the possibility of long-term divergence. And that's briefly what I want to hit on right now in this video. And the divergence is between the two twin yellow indicators, zip yellow and power yellow. And you can see that zip yellow is bouncing back and forth and going down, and and power yellow is bouncing back and forth and going up. Now, part of this is due to the fact that we had a big gap down, and if you haven't heard me say it before, the way you trade after big gaps, either up or down, is by avoidance. You do not trade those because the sensitive indicators, the best way to describe it is they have to get back into equilibrium, and it takes them sometimes 3 days, sometimes, like this here is a real long example, and it takes longer for them to get back into what I refer is an equilibrium. And I would say right about this green candle is where the equilibrium probably is, coming back in, but you can argue a few different spots before that happens. But that's not important because you can pick each line and determine what's happening after a big move anyway. And this one here dropped, like from 420 down to 280, then it went back up. So, it's dropping 25 or 30% of its value in one day. And so it was a significant part of the value of this stock. That all being said, this is an example of how divergence can be seen. It's a real longer type of a divergence. It's just like right here, this day right here, it was 4 days after the drop. Zip Zion is lowest, and theoretically it should be going up. But for 2 days it remains flat, and not until this day that Zip Zion goes up and the price goes up. But obviously it goes up very little because of the height of the candle. So somewhere in there the indicators start to react normally, but you could go all the way out to this pink line, vertical line, before you say they react normally. We've got a gap here, and I'll just make a couple quick comments on it. If you just look at the price chart, you've got a green, red, and blue indicator that I think the green's at 20, the price green is at 23, and it's flat. And so typically if we just looked at the price chart, we might say, well, this is going to go up, but because we've had such a huge downturn, because zip yellow at this point is at 8, that would not be a wise move. Also, you got a doji candle at that point. In fact, most of these are doji candles for the last 8 or 10 days. But there's not a lot of movement, and it is going down slightly. You have, in the zip chart, you have a red peak at 27, which, a zip red can move 50, 60, 70, 80. I mean, I've seen it move over 90 points in one day many, many times. So zip red is really fast. Swing pink is the other super fast line. All the lines in the zip chart are fast, and when all the lines are being held to a maximum height of 27, then you know that there's a lot of downward pressure imposed within the forces of the stock. And you also then, you can look at the uptouch of power white onto the orange line. You can look at the Zion line and see that it's up touching 0. This is a quad top, you might call it. It's got 4 peaks on it. Typically we think of a triple top in the candles that goes down, but you can't see that in these candles. Or you think of a triple bottom that goes up. And so in this, it isn't until we get over here to the trend chart that we see that the power or trend red is in an uptouch on the pink, and the 3 of them are real close together: green, pink, and red. Trend red is at minus 30, trend green minus 28.1, and trend pink at 28.4. So green is the highest and red is the lowest. We have an uptouch, which means a reverse. Contributing factors to that are the gray is in a head and shoulders pattern, which tells us the next day it should go down, or several days go down. Trend red is in a triple top, a falling triple top. Trend green is in a head and shoulders pattern. And wait a minute, a little bit ago, or you can see that what it looks like is that trend green is a down touch pink, but yet it's in a head and shoulders pattern. And so, but again, contributing factors, the trend trio, yellow, pink, blue, are all under 0. Trend green and trend orange are going down, and I might add very strongly. You also have the power 4, pink, blue, white, and yellow. All of those are up above. White's almost above. It looks like it's up touching the orange, but they're almost above the green, whereas yellow is below. And that, whenever you see the yellow opposite of the others, there's usually a significant reaction to it. Most of the time when yellow is above the green and orange line, especially if the green and orange are above 0, that's a good indication for a gap up. It's real powerful conditions for it. So the key obviously is your trend red is uptouching the best trend color. That's the trend pink. It's the most powerful, or it experiences the most powerful reaction to the situation, or reversal reaction. I will also say that trend gray is in a lower high, which is the definition of a downtrend. When it does a BOC lower like that on a peak, that is a lower high. And that definition, the experts, quote unquote, will tell you that you should wait for a couple of those before you get into a trade. I completely disagree. You're already in a downtrend when that head and shoulders pattern is there. You don't need confirmation. You don't need that lower high, especially when you have. Look at even your swing chart. Your red and green are way down below 0. Well, I guess they're not way down. They're just slightly down, but they look like they're way down. They've dropped quite a ways in any case. And that is before the gap. This is on the vertical green line, the vertical pink line, excuse me. Now, swing green appears to be going up, and red is going down, obviously. But you may not be able to see it, but the swing blue line is crossing underneath the green line, and it was above it before the last 4 or 5 days. So. And I think you've all heard me talk about the connection between the swing green, swing red, and swing blue. The swing blue being the crossover line, and when it crosses over green and goes down, it's in a downtrend. When it crosses over red and goes up, it's in an uptrend. And when it crosses, the other 2 crosses can be weak crosses. Like, for example, when blue crosses over green, sometimes the uptrend is weak. But when it gets up over red, then the uptrend typically is stronger. So that's the ideas behind that. I thought I'd just comment on those while we had it, because we were there and already looking at that particular situation. But that's an example of, other than what I just told you about the gap, this is an example of how long-term divergence works, because something is gonna pop. You just don't know what it is until you look at the indicators and see. And with the exception of that trend green that was down touching the pink, all the other stuff, I might have missed something little, I don't know, but all the other stuff was telling us we were going up or going down. And so there was just too many things there, triple tops and falling triple tops and everybody under zero. All the 7 trend lines, the 3 groups of the short-term trend lines, all those lines were down under zero, which means you're going down, and except for swing green, all of them, no, I take that back. The trend trio was under zero, and that was going up a little bit as well. But everything was under zero, and that's, again, the basic idea behind that when I say that, make that comment, is that if you're going up, if your indicators are going up but they're under zero, they are not as strong as they are when your indicators are going up and above zero. Likewise, when your indicators are above zero and going down, they don't have as much power as they do when they're going down under zero. So keep that idea in mind when you think about your reactions and which lines are moving in which directions, because the 7 short-term trend lines are powerful. We need those. We tried to create one group of, or a one-line short-term trend line, like we did with the master long-term trend line in the candle chart, which is your blue dashed line. But we couldn't do it. We just couldn't put the different forces together, and then we decided, well, wait a minute. If we're tracking several different types of forces, let's record them all. So that's how we came up with the 3 groups: the trend, the power, and the swing chart lines. 7 total lines together. We make them wide on the chart because we want them to be the lines of slow movement, or recognized as slower. And then, those wide lines are the lines that you down touch or up touch. Those are important lines for us. And when, like for example, the trend trio crosses zero, they all cross on the same day, either over or under. And there's some often significant price movement when the trio crosses zero. So amazing indicators. And I mean, it's just a combination of things. Without the indicators, we have nothing. We built over 13 or 1400 indicators. I'm actually not sure, but somewhere in there. We ended up with 22 market force recognition indicators, and the key indicators, like I commented about how yellow, the 2 twin yellows are important. When they're together, they just give us information that isn't necessarily there, and they also they have multiple traits. Like zip yellow, when it's low and running under 10, even under 20, prices have a tendency to go down. And when it's above 80 and bouncing back and forth, zip yellow, when it's doing that, it has a tendency to drive prices up, or basically you're in an uptrend. So there's different things that the indicator lines will also tell us, which is important. And then of course you have like the zip pink, the swing Zion, and the 3 price lines, red, green, blue. Those are price barometers. They follow the price. And that's important when you're comparing different things. They aren't. They were built to follow the price. They were designed that way, just like the Zip Green and Zip Zion. Those two lines track buyers in and out of the market. Zip Zion is the grandfather to the Zip Green line. It takes a lot of power to keep Zip Zion at zero. And when it's at zero, when Zip Zion is at zero, Zip Green is also there. And it takes a lot of power to move it off, or to keep it on zero, or to keep it on 100 when a huge number of people are entering the stock. So those combinations of lines we watch very carefully. We're concerned about what's happening. That's probably why Zip Zion works so powerfully, because the people buying the stock haven't caught up to where the sensitive indicators are telling us the stock is going. And when it remains low, for example, when it's lowest and going up, the buyers are trying to catch up with the price. So that might be a different way of looking at it than what you're thinking, but that's in reality that it can be said that way. So it's a powerful system. We're absolutely amazed. We created the sensitive indicators, and then the three-step formula came along. With those indicators, we began to identify patterns, and when we put good conditions with those patterns, we then had a high probability rate of in excess of 95% in almost every choice. So 95% of the time, it's going to go in the direction anticipated with the good conditions. Signals then gave us the time to enter or exit a trade, and the procedures power, which is the third power. You got the indicator power, the formula power, and the procedures power. The procedures power gave us when you have three choices and you analyze those three choices and you look at the evidence supporting the three choices and you make a decision on which one you want to trade the following morning, that analysis is the procedures power, because you can't help but get better at determining the relationship between these sensitive indicators and price than by just redoing it as a part of the process. Every day, each day, you get better and better and better. And that's the procedures power. And we absolutely and just mandated ourselves to creating a system that had that power. We wanted the novice, we wanted the beginner to be able to come into this situation and see what the market is doing. That is not what the people out there want you to believe. You can pick tops, you can pick bottoms. This entire system, the day trading visual basic system, is designed on reversal patterns, on cycle changes, on new trend directional movements. And what oftentimes at the very beginning of a change is the strongest part of the change. Gaps are an obvious example, but things can get really long green candles going up the next day or going down, and hence if you haven't read anything or seen anything about the gaps, look at some gap videos and begin to understand how the three pattern gaps work, because you have to have the identical indicators, the down touch in the trend chart, and you have to have the proximity group in one of the 7 patterns that we see for uptrends, for gaps up and gaps down. And you have to have all 3 of those before you get a gap. And if you don't, you can get a long green candle, or you can get two really nice candles, or you can get an uptrend. So it's not going to hurt you. It's just that some, like when they're looking for a gap, they want to find a gap. But you're definitely going to increase your portfolio by having a system with a formula to search properly, and for a procedure to analyze the possible choices properly. And then when you recognize that every choice you make has a high probability of going in the direction anticipated, it just builds your confidence. And you always need your confidence being strong when you're trading. Believe me, I've been there, I know. If you're frustrated, if there's something that you're having trouble with, it's all in your system. One last comment. It's just like the day that I made my first trade. I thought the price was going to go up. And in fact, I think it went up a little bit and then it went back down and stayed down. But the point I want to make is that I thought I had a system. Even after that, when I built my first indicator and started using that, I thought, oh, I got a system. I didn't have a system. Even when I had 50 really nice indicators, I did not have a system. I just had a bunch of good indicators. I didn't have the connection between the patterns that you need to establish and identify, and then with good conditions create your high probability trades. And then you have a signal that tells you when to get in and get out of the trade. It's absolutely amazing. I'll stand here and tell anybody that and encourage them to look at the system, because it will change your life.